Top picks now from David Burrows, the president and chief investment strategist at Barometer Capital Management. Evercore Partners, EVR, on the New York Stock Exchange. Continuing with your theme about markets getting better and these kinds of companies benefiting.
Yeah, we started 18 months ago or so targeting U.S. banks. We moved out through insurance companies, asset management, and staying within the financials theme, but one that's a natural extension. If you believe that companies have been working their way through dividend increases and share buybacks, they still have very strong balance sheets. As the economy is getting a little better, we think that we are seeing a big pickup in mergers and acquisitions. And Evercore Partners is a company that's very specialized in mergers and acquisitions and corporate finance. About 90% of their revenue is there. They're a leader in the industry. They have very good leverage in this industry as you see deals pick up. And we watch the news, you see what's happening, likely to benefit as markets get a little bit better.
Next up, United Rentals, URI. I don't think we've heard this one recommended before on the New York Stock Exchange. Why this one?
So we've been very focused on the domestic North American economy and slow, steady improvement. URI is in the rental business. They rent out heavy equipment to construction companies in non-residential construction. If you believe that there is new capital investment slowly picking up, they're likely to see non-residential construction, and we are seeing non-residential construction pick up. They provide a very capital efficient way for builders and people who are doing capital improvements to get equipment without spending a lot of money. They also have systems to help them manage the efficiency of their use, so they can track them using GPS to see how active they are. And expectations are quite low. I think the street expects them to have sort of 4% growth. It's a highly leveraged business model, and they have been beating estimates recently, and we think that that can play out through the course of the year.
And a return on equity of about 22-23%.
That's right. It's a great business model.
Canadian National Railway, CNR. We know about this one. Give us the case here.
So we've recommended this a number of times. Part of our recommendation was based on the growth in crude by rail, which of course has its positives and negatives, but is a real case. It is very North American focused, obviously. North-south is their network path. And so as business picks up in North America, they benefit. So certainly crude by rail has been great. But in the past, their traffic has been as much as 25% lumber. Now, we're not expecting to go back there, but as home building picks up, lumber picks up, chemicals are a big part of what they ship. And as manufacturing goes through a little bit of a rebirth in North America because of low energy prices, we think that a lot of the stuff is going to continue to be shipped by rail. So we think that there is still a long runway in front of CNR. And it's not an excessive risky way to play it.
CNR, United Rentals, and Evercore Partners. Just a bit of time here, about a minute left. David, you seem to be very good at anticipating themes and trends and what might work. What are the couple of keys in doing that?
We really believe you need to find industries where over time a higher and higher percentage of companies within the group are participating in a market rally. So we have models that we track that across 41 different industries. And so long as breadth is expanding or more companies are participating, we know money's getting put to work. When breadth starts to deteriorate, it's often the weaklings that sell off first. People are watching the leaders, but that tells us money's leaving the group, time to start paring back. And so we run those models every day, and we try and focus in those groups where we got the wind at our back. And it's worked quite well, thankfully.
All right, very good. Great to see you, David.
Thanks very much for having me.
David Burrows, President and Chief Investment Strategist at the Barometer Capital Management. Thanks for all your questions this evening. Jamie Carrasco tomorrow night to get your questions ready for him. We will see you tomorrow. Take care and good night for now.